and welcome. You tune in to Buy Now Sell Now with me, Equita and with me is Kanishka Sarkar. In the next 1 hour, we'll get all your questions answered by our experts. Keep sending in your questions and we'll get them answered by our experts. But first up, let's take stock of how the market is shaping up at this juncture. Well, it's not again a great day for the markets today. We are still in the consolidative phase. In fact, Nifty is down almost 116 odd points from the day's high right now. We are, in fact, below 25,400 levels also. We are trading with cuts of 0.3% on the Nifty. 25 is 379 is where we are at. Nifty Bank also following suit. It has turned absolutely flat right now, but it is at the lowest point of the day right now. 57,164 is where Nifty Bank is at. So basically, again, that correction, we are correcting again. And as far as the sectors are concerned, only Nifty Realty is in the green. Barring that, all the sectoral indices are trading in the red. Nifty Pharma taking a sharp knock on the chin with cuts of 1%. Nifty IT also, before we kickstart the earnings with TCS today, Nifty IT is also trading under pressure with cuts of 0.8% coming in. Let's look at the broader markets then. We have mid caps that is down almost 0.1% right now. Small caps also down 0.1%. So it's a sea of red coming in across board right now. If you look at the market breadth, it is tilted in the favor of declines, and India VIX has also ticked up 1.8% actually right now. 12.1 is where India VIX stands at. But let's look at the top gainers then. Maruti Suzuki is doing well. IndusInd Bank, Ultratech Cement, Axis Bank, Geo Financials in that pecking order. These are the top Nifty gainers, and on the losing side we have Bharti Airtel, Tech M, Cipla, Coal India, Sun Pharma, Dr. Reddy's that are seeing cuts of almost more than 1% in trade as far as the Nifty top losers are concerned. So largely, another somber day coming in. We are still to watch out for those tariff trade outcome as far as India is concerned. Today is the 10th of July. So market is correcting before that, Kanishka.
That's right. A second day of declines are coming in for the market. But let's move on and get all our viewers' queries answered, their stock-specific queries. So requesting our viewers to keep sending their queries on the number that is flashing on your screen. Do tell us the name of the stock that you want to buy, sell or hold. Tell us your buy price and also the time horizon that you want to keep the stock for. And to get all your queries answered, we are now joined by Sharan Lillaney, who's an independent SEBI research analyst, and G. Chokkalingam, who's the founder and head of research at Equinomics Research. Thank you so much, gentlemen, for joining us today. But before we get started with all the queries, Mr. Chokkalingam, I wanted to understand from you, what are you making of the markets currently? A second day of declines is what we are seeing. And also, if you could help us with your take on the IT and pharma spaces.
Certainly. I still remain very bullish on Indian equity market for both short-term and long-term. In the short term, the only concern is the expected trade deal signing between India and US. That is the only possible risk factor. If there is any friction in economic relationship, that would be a cause of concern because we depend heavily on the US economy for export of IT services as well as pharma exports. Otherwise, all the domestic factors are very strong. Whether you talk about the monsoon or GDP growth above 6%, the record level of food grain production, banking system in the last 10 years, tremendous improvement, forex reserves at record high level. And now this week, the number of investor base on the capital market has breached 22 crore, and every week 6 to 7 lakh new investors are still coming into the market. So there's a long list of domestic macro factors which are giving a lot of confidence, apart from the inflation rates being record low. And therefore, the reversal of interest rate cycle also would continue. So I remain very, very optimistic. The only possible risk factor is, as I mentioned, any problem from US trade deal. Otherwise, it's extremely robust. And the small and mid cap is the space which should do extremely well, because Nifty Sensex, if you decompose, most of the sectors have still single-digit growth syndrome in terms of volume growth on year-on-year basis. So the broader market should do well. In the IT, I am not so positive on large IT stocks because they are most unlikely to grow their revenue in dollar term beyond 3-4%. and the wealth creation story is over for large IT stocks, but still it is available in one or two select small and mid-sized quality IT stock, because what we saw from 2014 to 2018-19, that is consolidation and merger and acquisition, including Mindtree by L&T Infotech. I expect that kind of once again story unfolding, because organic growth is not there. Inorganic growth is very much possible through acquisition. So there will be a good amount of possibility in wealth creation in the quality small and mid cap IT stocks. As far as pharma stock is concerned, I would still suggest investors to focus on the domestic focused formulation companies, particularly if the enterprise value to sales is less than 4-5 times, because recently we saw Torrent acquiring JB Chemical at 6.5 times, but JB Chemical has a very high margin. So opportunities are there in select domestic pharma companies which are trading at below 5.5 or even 6 times enterprise value to annual branded sales. As far as export oriented, particularly US focus, I would wait and watch for the final signing of trade agreement between US and India.
Right, absolutely. Thank you so much for weighing in on the market. So incrementally, you're positive on the market. It's just that the trade hiccup might be a deterrent, if so. But let's get on. Let's get on with the show. Then you can keep sending in your questions on the number that's flashing on top of your screen. Also, your investment analysis on holdings and tips for fresh buys in the market. We have our experts with us. Let's get started with all the questions. Then first question is coming from Subramanian, who's from Bangalore. He's writing in about Equita Small Finance Bank. He's bought 1,000 shares at a buying price of 61 rupees. He wants to know if he should be holding it, selling it, or switching, this for a longer term view. Mr. Chokkalingam, let me come to you on this one. It's a long term view coming in. Equitas hasn't really done much. In fact, it has been consolidating over a period of time. So what should he be doing at this juncture? He's bought it at 61. Should he be selling it, or do you see an upside coming in?
It would be a sell in my research view at around 66 to 70 range. I am not that bullish on the small finance banks because the problems are still not yet over. Let us not forget the fact that there is a lot of competition in mobilizing the deposit industry. Growth in deposits have come down. So, the banks which have a very high share of low cost deposits like CASA deposit, they are the one which will be able to overcome this temporary dip in the credit growth as well as deposit growth. So I would suggest stocks like Bank of Maharashtra and Central Bank of India. Bank of Maharashtra has already announced officially the business numbers for Q1. It's very robust, much above the industry. And Central Bank of India trades around 1 time. That has given a guidance for FY26, which are really fabulous as compared to the industry growth. So I would have, buy recommendations strongly on these two. Therefore, I would give a sell call on Equita's SFE in case it recovers around 66 also.
Okay. So that's the view on Equita's SFP. But coming to you now, Sharan, we have a query coming from K. Narasimha Reddy from Hyderabad. They want your view on persistent systems. The IT pack is back in focus as TCS is going to kickstart its earnings today. So do you feel persistent system is a good bet for the long term? Our viewer holds 30 shares at a price of 5,289 currently.
Around 600, 200 odd levels, the stock has seen significant selling with higher volume, and the stock is today at 5,700, taking support at 5,700. So everyone is waiting only for TCS results, and post TCS results and commentary, we'll be able to take a call on the long term. But looking at the price action, it's about to break down below its 100-day moving average and can retest levels of 5,450 odd levels. So if you want to, you can book profits today, and in the coming 1 or 2 weeks again take a call. So I would suggest booking profits today because there is a high possibility that it retests its 200-day moving average 5450 odd levels, and you can again enter it at those levels. If by any chance TCS gives a bad commentary, it will impact the whole IT sector, and you could see a big kind of selling coming in the whole sector in the next 2 or 3 days. So I would suggest exit the stock and re-enter around 5450 levels.
All right, so that's the view coming in on persistent systems. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll continue to take your queries on the other side. Stay tuned.
at a price of 280 rupees. What would your what do charts suggest? The viewer wants to stay invested for 3 years.
Got it at a great price, and I think you should hold on to it. And looking at the chart pattern, I think easily you can see 450 odd levels coming in the next 1 or 2 weeks.
Delivery.
Price action is very good, higher high, higher low pattern, trading above all its moving averages. So I would suggest hold. You can even, if it breaks about a 450, 460 level, you can even see higher levels of 480 to 500. But definitely hold. You're sitting in good profits, so you don't have to worry about anything.
All right, moving on to the next counter. This is Angad, who's writing in from Indore. He says he's bought Jubilant Foodworks at 686 rupees. He wants to know if he should be holding it or selling it in the next 6 months. That is a shorter time frame. Sharan, do you want to take this on the charts because it's just for 6 months?
So Ankita, we have discussed this stock time and again. This stock doesn't go anywhere. I think your money will be stuck in it forever. Looking at the chart pattern, it just trades between 600 and 750 odd levels. So it's better you move away to a better price action stock that is showing a higher high, higher low pattern. This is just consolidating on the sideways, and even fundamentally you don't see any major changes in the business. So I would suggest an exit on this stock. And again, you have time, look at some good sectors after the IT result is out in the next 2-3 days, and whichever sector is giving a good breakout, pick nice stocks from it, you will get a good return.
Okay, so that's the view on Jubilant Foodworks. But Mr. Chokkalingam, now coming to you, this is a more broad-based query coming to us from Dikshita, viewer. She wants you to suggest a few picks for that she can invest in currently, which look good at the current levels. She wants to invest for the long term.
Some of 3 stocks I would suggest. One is Jyoti Lab. It has come down a lot. Yes, I do agree FMCG sector as a whole is going through single-digit growth syndrome, and Jyoti Lab is not an exception. But my strong view is that is in the price. Stock is very close to 52-week low. And most attractive point is that the enterprise value to branded sales is around 4 times. Whereas most other FMCG branded companies are trading at anywhere from 6 to 9 times. So I believe that this company would be re-rated, and it would also be able to improve the profitability in the next 1-2 years substantially. Therefore, 1 to 3 year outlook, it's a very good stock, I believe. And second is EIH Limited, East India Hotel. This is also quite close to 52-week low. It's just fallen a lot from the 52-week high. And in EIH Limited, ITC as well as Reliance Group have a substantial stake of more than 30% combined together. And this company is also going for a lot of expansion, EIH Limited. And the outlook for water industry remains very robust. And not only that, if I compare this with Indian Hotel and ITC Hotel, in terms of EV to EBITDA, it is one of the cheapest. And because of the stakeholding by ITC and Reliance in EIH Limited, I believe there is a possibility of re-rating of valuation multiple for EIH Limited. So I would strongly recommend Jyoti Lab and EIH Limited. And third stock would be FDC Limited. As I mentioned earlier, the domestic formulation companies are trading at as high as 6.5 times enterprise value to branded sales. Now, FDC Limited has a 82% market share in the domestic market of total sales, its own sales. So this also, if you assume even 4.5-5 times, there's a lot of upside. So this goes, I also have invested in FDC Limited.
All right, point taken, Mr. Chokkalingam. Let's move on to the next question that's coming in. It's by Mitlesh Kumar, who's a senior citizen from Mumbai. He holds 1,500 shares of Laurus Labs at a buying price of 366 rupees. So he's gotten at a good price. Should he be continue to hold this, or should he book profits? And he's a long-term investor and he's a senior citizen. So Mr. Chokkalingam, let me come to you for this one, because he's already he's sitting at good profits, and Laurus Labs has been a clear outperformer. Do you see more upside? Should he be waiting and holding on to the stock?
Some upside is limited. The stock has already run up and it is quite elevated in terms of valuation. But definitely, if you have a 2 to 3 year time frame, I think there is a further upside to the stock significantly. Next 1 year, it may not give you, considering the kind of orders it is procuring. It has got a good potential for medium to long term.
Okay, so that's the view on Laurus Labs. But Sharan, now coming to you, our viewer Sujita from Kolkata. He holds 500 shares of Geo Finance at a buy price of 226. He wants you to suggest a short-term and medium-term target for this stock.
Kanishka, I think we have given a buy rating on the stock today itself for an intraday buy, but I would suggest a short-term trading plan. I think the stock can reach levels of 350 to 370 odd levels and even retest this high of around 395. So I would suggest do keep holding, but since you have got it at a lower price, a very good price of 220, do keep trailing your stop loss to higher levels around 50-day moving average, around 300 odd levels. And if it closes below that on a daily closing for any reason, you can exit and review it, but I don't think that will happen. And looking at the price action and the announcements by the company, I think it can easily test 350 to 370 in the next 2-3 weeks.
All right, so that's the view coming in on Geo Financial Services. But moving on to the next question, this is Dr. Singh who's writing in. He holds 100 shares of Engineers India at a buying price of 210 rupees. Should he book profits or continue to hold it for higher targets? Sharan, Engineers India is another counter that has done very well in the last 6 months. He is clearly sitting at profits, but do you see more upside? Should he be holding on to it or should he really book out profits right now?
So Ankita, my rating would be on hold. Looking at the price action, it's very good, higher lows, and it's almost on the verge of a new breakout, which can take the stock to around 270 to 280 levels. So I would suggest a hold. Definitely, you have bought at lower levels, so I would suggest trail your stop loss a little higher to around 225 levels on a daily closing basis, and that would be fine for now. I think you can easily see targets of 270 to 280 in the next 2-3 weeks.
Okay, so that's the view on Engineers India. But Sharan, we have another question coming for you. This is Tom Zwergis, who has written to us from Bangalore. He holds 200 shares of NLC India at a price of 247. So what's the view on this one for the next 6 months? Should he hold or exit?
Come.
Bad. Stock is trading below all its moving average. I would suggest book out right now because your stop loss is very minimum. It's only 16 rupees. I know it's very difficult to take a loss in such a short time, but given the price action, if it breaks below 220, you could see levels of 210 to 200 odd levels. So you have a lot of time, lot of good stocks with better price action than NLC. So I would suggest an exit strategy currently. And as I mentioned again, post TCS results today, I think you can see good action in the market tomorrow or day after. So you can easily pick some good stocks with better price action.
All right, so that is the view coming in on NLC India. But let's move on to the next counter. This is KS Rao, who's writing from Guntur. He says he would like to purchase Shriram Finance and hold it for the next 2 years. Is it correct to enter at this current rate, Mr. Chokkalingam? This one's for the next 2 years. Shriram Finance. Now, mostly, I believe we have lost Mr. Chokkalingam here. He's back on with us. Mr. Chokkalingam, I'll repeat my question for you again. This is KS Rao, who's writing from Guntur. He says that he would like to purchase Shriram Finance and he would like to hold it for the next 1 to 2 years. Is it the right time to enter at these levels? Now, NBFCs have been a common consensus with the analysts. How does Shriram Finance look to you for the next 1 to 2 year time frame?
Definitely for 1 to 2 year time frame, it's a good buy. They already have a great credential in building the business. And as compared to other NBFCs, like Bajaj Finance and One Extreme or even Poonawalla, this has got a very good upside in terms of, price to book value, which is very reasonable as compared to other players. So one can buy for 1 to 2 years.
Okay, so that's the view. Can buy for 1 to 2 years, Shriram Finance. Mr. Chokkalingam, another query for you. This is Anupama from Bangalore. She has 1,300 shares of, she has 1,300 shares of Bank of India at a price of 128 rupees. She can hold for a year. What would your advice be?
Definitely, it's a hold. Interestingly, all PSU banks have improved asset quality phenomenally. And Bank of India also no exception. Definitely, and net NPA is very comfortable and growth cost at deposit also quite reasonable. So it's a good to hold for medium to long term.
Right, so that's Bank of India. Let's move on to the next question. This is Gopi who's writing in. He says, again, this is a question on ITC Hotels that he's received through the demerger of ITC. He's noticed that the stock has been rising over the past few weeks. He wants to know if you could tell him if there is any specific reason behind this move and is it a good buy or add at this time for the next 3 to 4 years, he wants to hold ITC Hotels. Mr. Chokkalingam, I'll come to you again on this one. ITC Hotels, he wants to know perhaps the reason why it is rising in the last few weeks, and also is it a good hold for the next 3 to 4 years?
Definitely 3 to 4 years, you will get a very decent absolute return, no doubt. ITC is behind it, and it has left some cash with the company, and also a lot of expansion plans are there. But short to medium term, I may be wrong, but I have a strong confidence that EIH Limited, East India Hotel Limited, should outperform ITC Hotel by big margin. Because if you look at the EV to EBITDA, it is extremely attractive as compared to ITC Hotel. And as I said, Reliance Group and ITC, they have a stake, combined stake is more than 30%. That also gives me a lot of comfort. And I expect a re-rating of valuation multiple for EIH Limited. So I would prefer EIH Limited for short to medium term.
Okay, so that's the view on the hotels pack. But Sharan, now coming to you, Shaurya has written to us from Gurgaon. He holds 50 shares of Bharat Forge at a price of 1310 rupees. He wants to know if he should continue to hold or sell them.
Looking at the price action, I think it's breaking below the 200-day DMA, but I would suggest a hold. I think chances of reversal are quite high. And if it trades about 1300, I think it can reach your price also very soon. So I would suggest a hold, but if just keep your stop loss to a lower level of around 1180. If it closes below 1180 on a daily closing basis, I think you should take a stop loss and exit. But till now, I think there are very high chances of reversal from this level.
All right, moving on from Bharat Forge to the next counter, that is this is Adyanath, who's writing in from Mumbai. He says should he sell Tech M at 1,630 rupees. Now he's not given his buying price, but Tech M, Sharan, Tech M hasn't really done much. Do you see it reaching those levels, 1630? I guess that's his target.
So Ankita, actually Tech M started its rally around 1200 and made a high of around 1730 odd levels. But again, as I said, everyone is just waiting for TCS results. On back of that, I think market is very jittery in the IT space at least. And in the last 4-5 days, you have seen a lot of selling in the IT space, and I think Tech M is a part of it. So I think post today, if the commentary is good or even decent, I think you can see a reversal in the IT pack. But otherwise, I would suggest a stop loss around 200-day EMA of around 1550 on a daily closing basis. If it closes below 1550 on a daily closing basis, you can exit the stock, and then we can review it after 2-3 days.
Okay, so that's the view on Tech Mahindra. But with that, we're completely timed out. That's all the time we have to answer all your queries. Thank you so much, gentlemen, for joining us today and helping our viewers with your investment analysis. But with that, we'll let you go. Thank you so much for joining. In a powerful move that blends legacy with modern elegance, Jay Hampstead has chosen the iconic fashion brand, has announced actor Bobby Deol as its new brand ambassador. Known for his suave persona and commanding screen presence, Bobby Deol is all set to embody the brand's evolving style narrative. The collaboration reflects Jay Hampstead's continued focus on sharpening its presence in the premium fashion space while reinforcing its appeal among a younger, style-conscious audience.
With that, it's a wrap on this edition of Buy Now Sell Now. Kanishka and I will see you tomorrow with your questions answered by our experts. So stay tuned. There's more action coming up on ET Now.